Alright guys, listen. If you're upset at yet another PayPal video on this channel, don't be, because it's just supply and demand, guys. It's market economics, right? We're all about market economics here on this channel. You guys demand more PayPal videos, so more PayPal videos it is. I am a slave to the forces of economics. Today we're talking about the bullish thesis on PayPal, and we are trying to gonna mix it up a bit. I've already gone through my own bullish thesis on PayPal for the past 18,000 videos I've made on this channel for the past month alone. So I think that today we're actually going to switch it up a bit and go through and react to Gurgavin's bullish thesis. So if you guys don't know who Gurgavin is, he's a great analyst that I follow on Twitter, and I recommend you go check out his Twitter channel, or X channel, I guess it's now called. I recommend you check out his social media after you watch this video. He always tweets in all caps for whatever reason, which I don't understand, but I guess that's his signature. Anyways, this is not a sponsorship, by the way. I wish he was paying me to say this, but I'm just genuinely a fan of his work. And recently he's become a PayPal shareholder as well. So he made this long thread that detailed his bullish thesis, which is one of the most concise breakdowns of the PayPal thesis that I've ever seen. He does talk about a lot of the same things that I've talked about already with PayPal, but I still think it's helpful to get a second opinion sometimes, because, sometimes you hear the same thing from the same person over and over again, and then you just kind of tune it out because, it's like, of course, you're going to say this, right? Because we've heard the same thing from you. Sometimes it's helpful to get a second opinion. So without further ado, let's jump right into it. So Gurgavin's bullish thesis on PayPal, number one, is to do with valuation. So PayPal is now trading at 11.6 times this year's and 10 times next year's earnings, which is the cheapest in its history. Again, what's interesting here is that last part, right? PayPal's the lowest it's ever been in its entire history in terms of valuation. So let that sink in for a moment, okay? So this is what I mean when I say that there is a difference between price and value. So I know some of you might be kind of new to the stock market, and that's completely okay. And this is actually one of the things that tripped me up when I first got into stocks. When people say a stock is either cheap or expensive, they don't mean the price itself, right? So you can have a stock be way overvalued, so way expensive when it's $10, and have a stock be way undervalued, so way cheap at $1,000. So the price of the stock itself, the sticker price, does not really matter. You have to look at the valuation metrics, like, for example, the price to earnings and much, much more, right? So it's not only the price to earnings, but there's a whole bunch of metrics that you can look at. So I want you to just keep that in mind as we move forward. So number two, Braintree. So I see a lot of people saying that, and this is Gurgavin saying, I see a lot of people saying that they no longer use PayPal. Most of them do, they just don't know that. Braintree is PayPal's unbranded merchant, and it's used by companies like Uber, Airbnb, Facebook, GameTime, GitHub, Skyscanner, Priceline, and thousands more. Last quarter, PayPal's legacy branded business grew only 6%, while Braintree's unbranded business grew 30%. Braintree continues to take market share away from Adyen and Stripe, and Adyen's lackluster earnings today further confirm that. So what he's talking about here is Adyen is another payments processing services company, and their stock dropped by a lot because their earnings was not very good. I'll try to find a chart of the Adyen stock price. So this thread actually came out August 17 from Gurgavin, and I'm recording this on August 22nd. Today is. It's been a few days, but yeah, as far as I'm aware, Adyen's stock has not skyrocketed back up to where it was before. They're having a little bit of trouble apparently, but PayPal continues to grow with Braintree, and the next part of Gurgavin's thesis states that. PayPal continues to add large businesses to Braintree and expand its pre-existing relationships. This quarter, it was Booking.com, the owner of Priceline, and Opendoor and Kayak, etc. Last quarter, it was Microsoft. In my opinion, most of PayPal's future growth will come from its unbranded unit. So yeah, I already talked about Braintree in detail in previous videos, and yes, I would say that this is the most misunderstood aspect of PayPal in my opinion. All those companies that he mentioned that uses PayPal's Braintree, none of these companies' customers have any idea that they're relying on a PayPal service. And this is what leads people to the false impression that PayPal is dead because they think, oh, I never use PayPal products, so they must be dead. But as Gurgavin mentioned, Braintree is growing at 30%, so this isn't something that you should ignore, in my opinion. Moving on, next up we have number 3, free cash flow. For some reason, I have seen hundreds of tweets about PayPal having negative free cash flow and how it's down 75%. That's not really true because it sold $43 billion of buy now, pay later loans to KKR and had a $1.2 billion impact on free cash flow. This transaction will close in the next quarter. In reality, PayPal reiterated its full year guidance of free cash flow of $5 billion and it's on track to hit a new all-time high next year. And I think someone was asking about this buy now, pay later thing and how countries around the globe are entering recessions or just bad economic conditions in general. They're concerned that the concern is that PayPal is involved with these buy now, pay later loans, which the implication is that people might start defaulting on these loans. And what I have to say to that is I really like how PayPal has offloaded a lot of this risk of buy now, pay later loans to this company called KKR. That's what this whole deal was about. Now, granted, this is for the European market only, as far as I'm aware, but I think that this does take some pressure off of PayPal and take some of this risk away from PayPal. But yeah, as a result, this did have a negative impact on free cash flow, as Gurgavin mentioned, with respect to this deal with KKR. But it's expected to be a one-time thing, so it's unlikely to make a trend. And a lot of people only read the headlines, unfortunately, and they see, oh, free cash flow is down 75%, but they don't really read into it more. So again, this further fuels kind of the misunderstanding, and it might give us shareholders an opportunity, in my opinion, right? It could be an opportunity that, because a lot of people have misconceptions about the stock, that's how opportunities happen, because the stock gets mispriced. But anyways, moving on, that's not the whole bullish thesis, by the way, there's more. So number 4, buybacks. PayPal continues to aggressively buy back its undervalued shares. PayPal will buy back $5 billion worth of its shares this year. Over the last 18 months, PayPal has bought back almost 7% of the company. In my opinion, and this is Gurgavin saying, in Gurgavin's opinion, PayPal can double this year's buyback program to $10 billion using some of its $14 billion of cash and investments to fund it. PayPal will likely announce another $5 billion buyback in 2024 to buy back nearly 10% of the company, assuming that PayPal stays at these levels. I think there was a question on one of my videos about whether PayPal should buy back some of its shares or use some of its cash to pay down its debt instead, rather than doing these buybacks, given that interest rates have risen. And unfortunately, without deeper access to numbers, it's hard to answer that question, because that's more of a question that maybe should be directed at the CFO, and we just kind of have to trust that the PayPal management team knows what they're doing. But with this being said, again, I couldn't find the blended interest rate on what PayPal is paying for its debt. I wouldn't worry about this though too much, because usually for long-term debt, the interest rate will be fixed, and the higher interest rate will only affect either new debt or old debt that needs to be rolled over. Given the fact that interest rates started going up only in 2022, so it's been less than 2 years, it's possible that PayPal's debts are still at lower interest rates if they borrowed the debt back in the day before interest rates went up. Again, this is my opinion, not financial advice, but let's say the management agrees, and it appears that they do, that the shares are undervalued. It might be more accretive to use the money to buy back shares rather than using the cash to pay back his debt, given that maybe the debt interest rate is still rather low. But yeah, anyways, this is again something that we're gonna have to kind of just trust the management on. But moving on, number 5, negative sentiment. So the main reason for the recent sell-off has been the negative sentiment surrounding the company, not due to any impact on the business. Since the start of the year, PayPal has raised its full-year EPS guide twice in the same time, as its shares are down over 20%. 2024 EPS estimates has held steady at around $5.60. In my opinion, it would be even higher due to PayPal's aggressive buybacks. And I think that part was relatively self-explanatory, so let me just move on to number 6. Number 6 is new CEO. At the start of the year, PayPal announced its current CEO, Dan Schulman, will be retiring at the end of the year. There was a lot of speculation on who the next CEO will be, and we got the answer this week. So the little more on the CEO of PayPal, the incoming CEO. So it's going to be Alex Chris, and he led the Intuit division that generates more than half of Intuit's revenue. He oversaw Intuit's $12 billion acquisition of MailChimp, and he's going to take over as PayPal CEO effective September 27th. So again, although I made a separate video about this, although I have not heard of this gentleman before it was announced that he was going to take over as CEO, it seems like he's extremely qualified and has plenty of experience running financial related companies, given his history at Intuit. And if you guys don't know what Intuit is, it's the company that owns MailChimp, like the acquisition that he oversaw personally, but they also own popular services like QuickBooks, Mint.com, and TurboTax. So yeah, they own a lot of businesses that are kind of catered towards accounting and financial management and stuff like that. So yeah, and Gurgavin goes over basically the same thing that I had on the previous slide. So that's another kind of feather in the cap, as you will. Moving on, number 7 is public sentiment. The only other time that Gurgavin was harassed for buying a bean down stock was when he bought Facebook shares or Meta shares at $98. So yeah, as we can all see that Facebook shares are now up like dramatically up over 200%. Since when Gurgavin initially bought. And yeah, again, this goes back to the previous point of negative sentiment, right? So sentiment is incredibly negative on PayPal, and usually the Main Street opinion is wrong. And this is what people don't understand, is that, you know, they go on, I don't know, Reddit, and they go on Yahoo like conversations, which is like the most toxic commenting board. I'm not sure if you guys ever been on Yahoo Finance's comment board, but it's pretty much the most like toxic place you can go to, and your IQ will lower just by reading it for 5 minutes. You just have like people that say things that make absolute no sense at all. But you know, usually if you go on those like message boards and stuff and you just read kind of the Main Street sentiment of just everyday people, usually it's like you should do the exact opposite of what everyone says it is, right? Because the more people that pile on that be like, PayPal is dead, even though the stock is trading at the cheapest valuation it's ever been, chances are they're wrong. You know, I'm not saying that, you know, I'm going to be right 100% of the time. Maybe they're right? But, you know, just weigh it on a balance of probabilities is what I'm saying. Anyways, back to Gurgavin. What price should PayPal currently be at? Gurgavin does not see a single reason why PayPal should trade at below 15 times earnings based on where the market is currently at. And in his opinion, it should be at least $75 per share. And I think he's actually underselling it a bit because PayPal was just at $75 not too long ago. And I think that at $75 is still potentially undervalued. So what price should PayPal be at? Well, according to Wall Street thinks that PayPal should be even higher than what Gurgavin said. The average Wall Street price target is currently at 86.86. So that's almost 50% higher than the current price of PayPal. And yeah, there you have it, Wall Street consensus. Again, Wall Street consensus could be very wrong sometimes as well. But, it's good to see that at least there are a certain large group of analysts that believe that the stock should trade at a higher price than what is trading at now. A significantly higher price, I should say. And lastly, to wrap it up, Gurgavin says, do not mix your personal sentiments about a company with the fundamentals of its business. When everyone is bearish on a name, it's usually the best time to buy. So yeah, thank you, Gurgavin. This is what I've been saying all along, okay? So do not get emotional when it comes to investing. The reason why you guys don't make money in the stock market is because you're emotional. Just because the stock price goes down does not mean that it's a bad stock. And also vice versa, just because the stock price goes up doesn't mean that it's a good stock. Just to wrap up the video, one very last point. I'm sure a lot of you know who Jim Cramer is. And for those of you who don't, he's the host of the famous CNBC show called Mad Money. And over the years, people have noticed that Jim Cramer is very good at his job. And by very good at his job, I mean he's very good at calling tops and calling bottoms. And he's called them perfectly at times. Now, the only catch is that he does it in an inverse way, meaning that whenever he says buy, that's the top. That means you should sell. And then whenever he says the stock is dead and that you should sell it, that usually means the stock has bottomed out and you should buy it because the stock is going to rocket right back up. So this phenomenon called the inverse Cramer effect is so famous that there's even an ETF that inverses Cramer's picks. And let's just say that inverse Cramer has been a very good indicator to follow, basically. This is what I got from a Twitter channel. There's even a Twitter channel that's dedicated to inverse Cramer, okay? So this is what I got from the inverse Cramer Twitter channel, which is after loving PayPal at $200, $225, $250, and even $300, Jim has officially thrown in the towel at $63 and said, I don't want to own the stock. And the chart speaks for itself, right? They've even included a graphic at what points that Jim Cramer recommended that you should buy the stock. And yeah, it's like pretty much all the local tops, basically. So there you have it. Inverse Cramer says that now is the time to buy PayPal. So, that's checkmate to the bears right there. How are you going to argue with inverse Cramer, right? This is not financial advice, once again. I'm not telling you to buy anything, just as a disclaimer, right? Do your own research before making your own financial decisions. I'm just the one that brings you the news, right? So these are the facts. These are all public information. I don't have any insider information. You can look up anything I said and verify if everything I said was true or not, and take it up with Gurgavin, because that's the analysis that we went through today. But yeah, I mean, all I said were facts, and don't shoot the messenger, right? So it's up to you what you do with this information. And I'm just going to leave the video here for today. Be sure to give this video a like if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter, now called X. I'll leave a link down below for the description for that as well. So with that being said, I'll see you guys in the next video. Bye-bye.